keep swimming, just keep swimming, just keep swimming, swimming, swimming. What do? We swim.
Hey guys, and welcome back to the channel. It's me, Adam. You're watching Steady Invest. No, this is not brought to you by Disney Plus, as the last clip I showed over there showed the Disney Plus sign. Just showing you guys how much of a conglomerate Disney is when it comes to entertainment. They've got everything when it comes from sports to their animation studios, their cruise lines, their parks. It's quite impossible to not be familiar with Disney, no matter really who you are. So. The stock price started back in 1981 at a fresh $1.26. Up until today, you would have returns of 13, almost 14,000%. And we really start to see that exponential growth start back in the end of 2011. We traded sideways after 2015, 2016. We had the crash last year, and then since then we've recovered quite nicely from the pandemic lows. So we peaked at about 150 right before the pandemic, crashing about 40% or so. And since those pandemic lows, we've seen recovery of about 105%, and that's largely due to Disney Plus during the pandemic time, as the parks were closed and the cruise lines were closed, as well as not much production because of the virus. They yield no dividend and currently have a market cap of $320 billion. And I'll give you guys a little personal story about when I first started investing last year. Disney was a stock I wanted to get into, however my brokerage, for whatever reason, did not offer it, which was Wealthsimple Trade. I don't know why they don't have Disney specifically, and it was trading for under $100 at the time, and I was still pretty new, like I had no idea really what I was doing, but it's Disney, right? Was kind of my, my rationale there. And by the time I switched brokerages, it was well above 100, and by that point I'm like, oh my god, I could have got it for so much cheaper. At that point it was like 110, but the way the psychology works is you say I could have got it, a few days ago for that price, and then I kept seeing it go up and up and up, and now I'm at that point where I really haven't been able to establish a position. But I've also now learned that whatever happens in the past doesn't matter. Where is the price going to go in the future? That doesn't mean that you can't use that past information to determine, patterns and where you think the price could go from here on out. But just because it's gone up 100 or 200% doesn't mean it can't go up another 100 or 200%. Looking at the candlesticks, which is now becoming one of my favorite parts in these videos, because I like taking all this data, throwing it in a blender, and then trying to come up with a conclusion of where I think the stock price will be going in the near future. So the first thing I do want to show you guys is what is a gap in stock. So gaps are areas on a chart where the price of a stock moves sharply up or down with little or no trading in between. As a result, the assets chart shows a gap in the normal price pattern. Which brings me to this: what is a gap fill in stocks? So gaps on a chart show that there were no buyers and sellers connecting at price levels on a chart. Gaps happen mostly when news comes out and it instantly changes prices to much higher or lower prices than they were previously trading at. As the news event is instantly priced in by buyers and sellers, a void is left on the chart. The common saying by traders is that gaps always get filled, charts hate gaps, and mind the gap. So what exactly is a gap fill in stocks? What exactly does it mean? A gap on a chart is considered to be filled when the price action moves back to the open gap area where transactions were missing. Price must retrace all the way to the closing price of the previous day before the gap. Once price has returned to where it was before the gap day, it is technically filled. If price moves inside the gap area but not all the way through it, this is also called a partial gap fill. And scrolling down and seeing this picture over here, we see the gap over here, the price going up, retracing, and on this candle over here, this area, the gap is filled exactly where the gap was before. Now looking back at the chart, let's look at the gaps in Disney stock last year. And we saw a lot of gaps up. So taking a look at the first quarter earnings of 2020, a few days later, we had a gap from 108 up until about 115 or so, hitting resistance a few weeks later at the 200 moving day average and pulling back, filling in that gap June 29th, about a month and a little bit later after the gap. Moving on to August, the next earnings call, August 5th, we had a gap up from 118 up until 123, and then we see it break the 200 moving day average, hit resistance at about 136, pulling back, filling in the gap roughly in October of 30th. So all the way from August 4th to the end of October. A few days later, we have earnings again. We have a gap up from 128 up until 141, and we actually never filled this gap ever again. We may fill it in the future, but we would need to see a lot of weakness in the stock price possible. But just to show that gaps don't always need to be filled. This isn't a be-all, end-all, so do not base your entire trading strategy on something filling a gap for sure, because it may never happen, although it does happen quite frequently. The next one being on a very high volume day. There must have been some news on this day. So the price went from 155 to about, let's say, the bottom of the wick at 166. And up until today, we've only partially filled it, going down all the way to 160. So we still have a little of a gap from 160 to 157. So I'm interested in seeing if we end up filling this gap one day, especially with the 200 moving day average approaching that 160. But we would need to see some kind of decline in the stock price, whether that's due to a catalyst, bad news, or maybe just overall weakness when it comes to recovery and cyclical stocks, as Disney is considered to be one of those stocks that are going to recover and do very well as things begin to reopen and people are starting to go to the parks again and their cruises and whatnot. But only if the price is there for me. I do want to see more weakness in the stock. I want to see us closer to that 160 in that gap fill. I'd feel a lot more comfortable about starting a position. Again, as always, as most stocks for the long term, it doesn't really matter whether it's 160, 170, 200, 140, whatever, because in the long term, it's a blue chip company and Disney is here to stay for a very long time. That being said, though, it's been a wonky market, and it's not one of those stocks where I feel super compelled to get into it unless it's at that price that I really like, because there's so many other stocks that I like so much more at beaten down valuations over the last few months. But that's just me. Follow whatever works for your strategy. But that's it for my video. Thank you very much for watching. Let me know in the comments below, are you trying to get into Disney stock, or are you already in it? A lot of people bought in really cheap last year, so congratulations to you guys, and I will see you guys in my next video.